We got stocks on the move here after hours, so let's jump right into the disclosure. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same. The position sizes certainly changed. All right, let's take a look at what's going on here. Tesla snapback off lows, trading down to 195. I didn't see anything that looked good in that report, but I didn't read all of these statement notes that Bill posted. I'm not sure if there's a guide in here anywhere. The guide's probably what's most important. I didn't see that. All I saw initially is they basically missed on every number except free cash flow. Missed on rev, missed on EPS, missed on gross margin. You don't want to miss on that one. Beat on free cash flow, and issued a statement that their vehicle volume growth may be notably lower than growth rate achieved in 2023. That does not sound like a good headline. So the stock, at least initially based off that, and without seeing any sort of guidance and without reading all of these other statements, is holding up better than I would expect that it would. I expect it would be down more. But I think we traded down to as low as about 195. Now we snap back to 203 here. So that is Tesla. IBM. I'll tell you, ever since that new CEO came on board, I know it's been some years now, these IBM earnings reports have been different. Another okay report here from IBM, trading up decently after hours. Beat on rev. Nice free cash flow estimate, I think. I assume that's for the end of this year. Missed on software revenue. Okay, fine. Yeah, IBM trading pretty nicely off of that. What else do we have? We've got ServiceNow, symbol NOW. Interesting gap up in this thing this morning. The spread on this is so wide. It looks like it's trading flat to up right now. But $5 spread, $4 spread now. The Q4 adjusted rev basically in line. Subscription rev in line, a little miss. ServiceNow Q4 adjusted EPS is a solid beat, and Q1 subscription revenue estimates is a beat. So that looks decent to me. Excuse me. Stock's trading down on it at the moment. So those are our major reports. Obviously, we'll pay close attention to Tesla. Tesla having a decently sized impact on the Qs and SPYs just because of the market cap. Oh no. Who's in my front door? Hold on, give me a second. Let me check my Ring camera here to see who's at the front door. Looks like it's just a package. No worries. Cool. So I'd watch that 195 area and test on the downside, see if it breaks lower or not. All right, let's talk about today's trading session. Today felt like a wild session. It felt like a long day. I felt like I was so busy today. I was all over the place and just traded a lot. At the end of the day here, including a little move lower after hours since we closed, right now we're basically flat. So SPYs closed green, but they're trading a bit lower after hours, and now they're flat. The Qs are also down here about 80 cents after hours from where we closed, but still up 0.37%. And the IWM was not good. Also trading down from where we closed another 40 cents or so. It's a big after hours move on the IWM, especially considering that Tesla shouldn't really be affecting them too much. IWM, including the after hours move here, down a percentage point. So interesting day. Let's pop over to these daily charts and analyze it a little bit. So first of all, you can see on the intraday chart, if you look at the SPYs or the Qs, the creation of the upside shooting star candle on the daily chart. I'm actually surprised that tail's not that big. Would expect that tail to be even bigger on the SPYs. I know it's a little bit bigger on the Qs. So we gapped up pretty decently across the board this morning, with the IWM actually gapping up even more than the Qs, even though the Qs were being boosted by really solid Netflix earnings and really solid ASML earnings, which were also helping to push up all the semiconductors. Yet, even with these important earnings reports being positive and positively affecting big cap tech, the IWM was actually set to gap up more than the Qs were. IWM was once again gapping into 198.50. Now, the same things that I mentioned yesterday more or less still applied today. It was a pretty big gap up into 198.50 resistance after being a pretty big move that got us up to that 198.50. But yesterday did serve as some price time correction to allow these moving averages to cross and let this work back up. So while there was still extension into resistance, I was more optimistic for sure that the IWM could go today compared to yesterday. Yesterday, it just made sense that it would fail at that 198, and we were saying it pre-market yesterday with the TLT gapping down. I was surprised that the IWM was even able to gap up into that resistance level, so it wasn't surprising at all when the IWM failed and sold off. This morning, though, was a different situation than yesterday morning. First of all, yesterday gave one extra day of price time correction that allowed the moving averages to catch up, but we also had the TLT gapping up pretty decently this morning. It seemed like the gap up this morning was probably the biggest or second biggest overnight up move that we've seen in TLT so far in 2024, and we saw just how positively that was able to squeeze growth stocks and affect the IWM 2 trading sessions ago when the TLT was also gapping up. So I was, on the one hand, always a little bit nervous, gap up into resistance after a big move, but on the other hand, certainly a lot more optimistic this morning that the IWM might be able to break through 198.50, which is a resistance level from the gap fill, and that potentially the squeeze type names, the growth names, very similar to what they did 2 mornings ago, could potentially rip higher. And whenever there's a large gap, though, the first thing I always want to see is how is the small time frame extension handled? Meaning on the 5-minute chart, you're getting this really large gap up. Your moving averages are going to be all the way down here, still from kind of where we closed. They take time to catch up with a really big gap up. Depending on if you're looking at price or time correction, it's not unusual. 15 to 30 minutes tends to be very normal, where after 15 to 30 minutes, you've had enough price time correction where the ADMA had caught up to price, or price caught, grinded down to it a little bit, where, okay, now I can see how this market handled the upside extension, look for a pivot, and see if we can get some sort of continuation. And the first 15 minutes of the day, the first 3 5-minute bars were kind of so far so good. And that was with, at the same time, the Qs just about gapping up to the extreme extension point. So what we talked about was, we need to be very cautious on buying today. But if you're going to buy anything, you probably don't want to buy Mag 7 related stocks. You probably want to see relative strength come in similar to 2 days ago, where we can get growth moving, maybe we can get energy moving, some sort of rotation trade, and be avoiding these like QQQ, Mag 7 related stocks. And first 15 minutes of the day was so far so good. You can see the Qs pulling back off their small time frame and large time frame extension immediately off the open. Fine, they catch a bid, there's some backing and filling. But to me, it seemed like, even though the IWM, the first bar of the day here is red, it immediately snaps back up. Third bar is an inside bar. The moving average is slowly catching up. I was liking the things that I was seeing. This is not terrible price action, even if we drift a little bit lower, to satisfy that upside extension on the 5-minute chart, which can then, once it's satisfied, potentially enable the IWM to make a run after 198.50. TLT's gapping up. Qs are acting a little bit relatively weak off the open, I thought, compared to how the IWM was trading. everything is looking kind of hunky-dory versus our thesis, our thought process, our game plan in the morning meeting. And then the number at 9:45 just totally turned everything on its head. And scrolling up here in the VTF to find it. There it is. 9:45 a.m. U.S. S&P Composite PMI Flash came in at 52.3 versus a forecast of 51. U.S. S&P Manufacturing PMI Flash came in at 50.3 versus a forecast of 47.6. It's a pretty solid beat. U.S. S&P Services PMI Flash, so services, came in at 52.9 versus expectations of 51.5. Solid numbers across the board. The economy is humming. That's bad for the IWM. That's not what the IWM wanted to see. It's not what the rotation trade that we were game planning for wanted to see. And then everything changed. And everything changed, and you can see it with the move in the TLT. 9:45 number comes out. PMIs are hot across the board. Economy is humming and rumming, and TLT just crashes here. Why? It's the same story that we've been talking about all year. The market has been overpricing in Fed cuts. So that needs to come back down to earth. And when you get, strong economic numbers, well, guess what? If the market's still pricing in, I don't know where it is at this point. I probably need an update on it. If the market's still pricing in 125 basis points or 150 basis points of cuts this year, but the Fed is only saying we're doing 75, first of all, and I've been saying this for a while, for the last 2 years, the Fed has only done what it was going to say it was going to do. So I've had a 100% success rate by saying every single time we're expecting a Fed decision, what I always go with is, the Fed said that they're going to do this, so that's what I think is going to happen. And that has literally given me a 100% success rate on it. I don't see why this is any different. The Fed says, hey, we're probably going to be doing 75 basis points worth of cuts this year. Market goes crazy, prices in 150 or 200 or whatever it was at the peak, and then it needs to unwind that. And then when you get a good economic number, guess what? It still means more of this higher for longer. So what do you get? You get an immediate move lower in the TLT, an immediate increase in interest rates. And then we just spoke about this in yesterday's afternoon meeting based on someone who had a question about the relationship between IWM and the Qs and interest rates. And it was immediately back to the same thing. The thought process based on the TLT gapping up and the technicals of the Qs for further squeeze type action outperformance not only is wrong and out the window, if anything, it actually becomes the opposite. IWM should be getting hit down the heart. It's just like now we just flipped from this morning being similar to the morning of 2 mornings ago versus now it's this morning similar to yesterday morning, right? Yesterday morning we're like, hey, it doesn't make any sense that the IWM's gapping up so big with the TLT negative. This morning we're like, oh, hey, look, the IWM is testing resistance and the TLT is positive. Number comes out, heavy sell-off in the TLT, move up in interest rates. IWM is going to fail. And that is exactly what happened. Relatively weak all day. And then at the same time, you actually still had strength for a decent portion of the day in these magnificent, sorry, I just got filled on something, in these magnificent 7 stocks. And you can see that also if you just look at the Qs and how they traded in the first half of the day. Look at NVIDIA. NVIDIA's move was crazy. I think that when NVIDIA broke through 500 and I said, hey guys, I have a target of 570, but technically the measured move is to 607. People probably thought that my 570 target on my trade was ambitious. And I thought that the measured move to 607 was ambitious. And now here we are today, NVIDIA got to $628.50. I mean, just insane. This thing hasn't touched the 80 MA on the daily chart since it broke out through 500. I don't think that this rate of ascent in NVIDIA is sustainable, to be totally honest. But in this type of company, it can happen for a significant period of time. And if anything, the same things that were negatively impacting the IWM this morning and causing growth to fail and all that other stuff that we were looking at, it actually enabled more of that same regime of strength in a lot of this mega cap tech stuff, strength in semis, especially given that you had the ASML earnings and that you had the Netflix earnings this morning. And it just totally did a complete flip versus my expectations and my game plan that I had in the morning meeting based on the evidence that I had at that time. So I hope no one got hurt. I know for myself, like I was trading Upstart, which Sue called out off the open. I thought this thing looked phenomenal. I didn't really want to chase 36.70, the break of the inside day, but I bought some there anyway at the open. I actually added on the new lows. Next thing I know, I'm like $1.50 in the money. It's ripping. Growth is squeezing in a lot of different places. Things are looking good. And then here was another one. 945 number hits. Boom. Instant failure on this thing. Giving back all my profit. Getting stopped out. Next thing I know, I have basically a break-even trade in this because my game plan was so greedy. Otherwise, it probably could have been a little bit better than that. So that turned into just a total failure, as did almost anything else that you were trying to do in growth. Yet at the same time, these Qs are getting so extended on the daily chart, and as I've discussed, it has been a very consistent trade for 2 years now, that every time either the SPYs or Qs are extended by $10 or more to begin to look on the other way. We first hit that $10 worth of extension for a little period of time on Friday, again on Monday morning. We got 2 strong days of consolidation, but even those 2 strong bullish consolidation days were not enough to get the ADMA to catch up to the base. And the next thing I know, we're gapping up this morning. The 945 number hits. Qs are trading even stronger. And at a certain point today, we got to about 430 in the Qs, and the ADMA is at 418. So you're about $12 extended at highs in the Qs from where the ADMA is on the daily. So that is some rather extreme upside extension. And as per my game plan, because following your game plan is the key to success in this business, provided that your game plan is built on a actionable, rules-based edge that can breed consistent profitability. Game planning is how you have the discipline it enables you to have the discipline to be able to follow that consistently over time. I just continued to build in on the way up, and then at a certain point here, I want to try to remember where that was. At a certain point into this first move here, when we were extending higher at 1040, which again goes back to time frames, which is something that we discussed in an afternoon meeting recently. Seeing a straight move up from 10 a.m. to 10:45 without the Qs even touching the ADMA on the 5-minute is pretty rare for that time of day. And then from that point, you even extended higher. So it was almost becoming like a mini 5-minute chart parabolic move in the Qs. And it was actually into this that I communicated in the VTF. I was like, all right, you know what? I'm already heavy short TQQQ. I am now going to actually get even significantly more aggressive. So I got significantly more aggressive into this move, caught the pullback, and then when we broke new highs, I did the same thing. I got significantly more aggressive. I hit a point today where I was very, very, very much net short in my portfolio, even with only actually having one short position on, being the TQQQs. I just have a massive amount of size in it, to be honest. And even as of today's close, I am slightly net short at this point. So I covered more after hours into the initial downtick off the Tesla news. I'm still slightly net short with this TQQQ. But at highs when I was being aggressive, and that aggressive stock, I wasn't holding for a long period of time, it was just for a quick move. I had double the amount of TQQQ that I have here at the close. So it just shows you that at a certain point at highs today in the market, I was like pretty aggressively net short and very, very heavy in the TQQQ, but still kind of following my game plan and building it on the way up, piecing out on the way down, working the ranges a little bit, and managed to, even with the TQQQ being up 1.25% and me swinging stock from yesterday, actually am green in the position. The frustration, if I were to have one, comes from what happened 9:45. prior to 9:45, I felt like I was positioned so perfect for the evidence that the market was providing. Long IWM related names, long growth names for the squeeze, short cues for their $10 plus worth of extension, and Monday was a phenomenal trading day for me for the exact same reasons why I thought today was going to be also in the first 15 minutes of the day, which was just that mean reversion trade of being short cues when they were, again, super extended, but long all this other stuff that's squeezing higher. It just made for a phenomenal trading session. And it seemed like in the morning we were positioned in the same way. It's just that the PMI number coming out at 9:45 changed everything, and that's just the way that markets go sometimes. And we've got more important stuff that's happening this week. We're in earnings season now. We've got the PCE number this week. I think that we have a look at a GDP estimate, an early GDP look at some point this week. I forget which days those are, but it just shows the importance of paying attention to the economic numbers. I didn't think that the flash PMI readings were actually going to have this big of an effect on the market dynamics intraday today, which obviously was wrong, and they did. But yeah, here we are at the end of the day, and I've kind of got this little managed portfolio of long short on, and so far so good. Just it's always frustrating when, and this was the opposite to me on Monday, when you've got a short on that's acting much weaker than, that's acting much stronger than your longs are. And again, I can't complain too much because Monday was a phenomenal day. It was the opposite. I was able to be positive in like every long that I had on, yet also positive in my short, which that doesn't happen that often, but worked out pretty well. So I think that is really all I have. The other thing I guess I wanted to go over briefly was just the trading in NVIDIA a little bit. So NVIDIA obviously was super, super strong. And I started looking at it short for a variety of reasons. I know that it's moving based on ASML, but I've got extension on every possible time frame. We've got extension on the 5-minute, like when I was starting a short. And let me try to timestamp that. I think I did my first short in the 10 a.m. bar. Yeah, on the 10 a.m. bar, I looked for this RDR, 5-minute RDR, off of this candle here. 3 big up bars in a row. Candle 4 breaks the high of that bar. I short via a sell stop on the way down through 613.05 versus the high of that last bar, right? Again, a lot of extension here for 10 a.m. on a 5-minute chart. The daily chart has a lot of extension as well. And the other thing that was in my mind was now at these prices, the stock is even overshooting that $607 technical price target from the $500 breakout. So I got that in the back of my head also. But I'm really, really happy with how I traded NVIDIA. At the end of the day, I'm up a very small amount of money in it. But it's always, the key to success in trading is about process, not result. So I'm very, very happy with how I executed NVIDIA with the process behind my trades, that I was shorting on the way down. I mean, this just goes back, I'm learning from my own afternoon meeting. I'm learning from the lessons that I've sometimes learned multiple times over the course of my career. But it was just in an afternoon meeting like a couple days ago where I talked about, and we used Dimitri as an example because he had this nice short in Apple, but Apple was ripping up all morning and he shorted on the way down. And then I used that Mara example for me, where I'm fighting it on the way down, and then I just had the easiest trade ever when I actually bought it on the way up, when it was showing a break higher with volume confirmation, and I'm actually buying on the way up instead of trying to buy it on the way down. And then with NVIDIA here, it's the same thing. Easily could have found myself saying, oh my God, the daily chart here, the ADMA is down at $580 and it's been a $120 move in, like a couple weeks here. It's super extended on the daily chart. It's super extended on the 5-minute chart. And I could easily have just started shorting this thing at $612 or so, and then just battled it, and been super out of the money, and just added more on the way up and added more on the way up, and then, oh, here's a little bit of relief, but not even enough to get me back to break even, and now I'm adding more on the way up, and now I'm adding more on the way up, and now I'm in trouble, and now I'm freaking out, and now if I'm not getting squeezed out by the time it's hitting 628, I'm in a world of stress and a world of trouble. Instead, it was relatively stress-free. I said, okay, thing is ripping. All the same premises are true. Thing is ripping. Thing is extended on every time frame. It's overshot this $607 price target based on the daily chart. Look at these 3 5-minute bars in a row. I'm not shorting on the way up. I'm shorting on the way down. Oh, look, it just broke through the high of this third 5-minute bar. That high was 613.05. I will put in a sell stop at 613.05. Now, if the momentum comes in and this thing just continues to rip and rip and rip and rip and rip, guess what? My sell stop's never going to trigger. And I can reassess this with every new 5-minute candle as it closes to bring that stop higher to still potentially short on the way down. Instead, it puts in a pivot high here at 614.16 and then triggers my sell stop at 613.05. Boom, I'm short. I got a little over $1 in risk in NVIDIA, which is not a tremendous amount, especially with the way that it's trading, and especially with where the 80 EMA is. If I can get a price correction to the 80 EMA, that's down at 606. That is going to be a $7 move in my favor, just to the 80 EMA, just to that target number 1 of equilibrium, versus a little bit over $1 worth of risk. And then from there, we can take it as it comes. So got executed. It's a counter trend trade. Counter trend trades have a very high probability of failure by definition. So what do I want to do? I want to make sure I get my risk covered as fast as I possibly can. So into this pullback, it was more, the low here is 610.60. It's more than 1-to-1 to that low on where I shorted from. My risk is covered. Next thing I know, it doesn't even price correct to the 80 EMA, immediately taking off, bam, I'm stopped out. Okay, let's do the same thing. Let's wait, let's be patient. Bam, green bar, 1, 2, 3, 4. I think by this one, I was like now, by the time day bar 3 came in, I think, I was putting in sell stops again at the previous 5-minute bar high to short on the way down versus whatever the high comes in. Oh, guess what? I don't get triggered? Okay, fine. Same deal. Let me raise my stop again. I think somewhere in here, you can't even see it on the 5-minute chart, I did actually get triggered. Also had a quick pullback, was able to get break even, got stopped out. But then where you can really see it happening again here is on the 5-minute chart. And great call from Jim if he's here listening. I know he said hello earlier. But he said even early on the way up when I was trying to short this thing at 612, he's like, yeah, I think it's going to work its way to 620. You called that perfect. The high is 620.10. But it was the same deal. High of this last 5-minute bar, 619.52. This bar opens. It's above that. Once it's above it, I put my sell stop in 619.52 to trigger the trade. It puts in a high of 620.10. Then it triggers. I've got approximately 60 cents worth of risk. I get this quick pullback here to 617.40, more than enough to cover my risk. It snaps back. At this point, I very nearly got stopped out. I didn't get stopped out by 8 cents, but whatever. If I got stopped out, it wouldn't matter because again, I was able to get the risk covered and I'll just stop myself out and reassess. Luckily, I don't get stopped out and I'm able to capture this bigger move and actually make money on this trade. Before or after having more or less like a 15-minute correction here, it eventually works its way higher and breaks new highs. When it broke new highs again and I got stopped out of the remainder of my position, I said, okay, I'm done with this thing. Why? Because now I don't have those same small time frame extension factors that I was trying to take advantage of after this thing just took a 2-hour consolidation on 5 and 15-minute charts. Lets the 5 catch up, lets the 15-minute catch up. That short becomes just a much, much more difficult trade. Obviously, your daily chart extension is still there, So had I stuck with it and stuck with the same idea, just eyeballing the chart here, I probably would have been able to short versus highs and actually capture the bigger down move. But, you know, after seeing this consolidation and getting stopped out, I just kind of washed my hands with it and I'm done. But the reason why I wanted to go over that in so much detail was, one, not only to kind of review the execution of how I do it, but two, just to re-highlight a positive example of trading correctly off of the afternoon meeting that we had like a couple days ago or so, where we were discussing what Dimitri did so right and what I honestly did so wrong in how I traded a position, and learning from my mistakes, not repeating my mistakes, and then doing it right, not battling something here counter trend, trying to be like a surgeon, pick my spots on the way down, short through a level versus a level, and see what sort of continuation I can get. So I think that covers everything that I have, and I am happy to answer any questions that you guys have. What's that Tesla doing now? Nothing. Stuck in that area still. Whew. All right. See, there's a lot of stuff in YouTube, but I'm gonna start with the VTF. From Dave S. Hey Dio, I was wondering, and if I missed anything from above that, just recopy and paste it. I was wondering if you could take a look at QQQY. Defiance NASDAQ Enhanced Options Income ETF. Is this one of these short vol products that we've been hearing about so much, where they're basically doing like a covered call selling strategy in the NASDAQ? That's what I'm guessing this is, which is helping to suppress vol. I have a thesis on it that I would like to start forward testing. If you are in a market that is not a bear market and get 3 or more red candles in a row on the daily chart, followed by a green candle like on December 4th, you get long the Qs. When you say on December 4th, are you talking about on this QQQY chart, or are you talking about in the Qs? I assume you're talking about in the Qs themselves. December 4th? Let me reread that. Not a bear market. You get 3 or more red candles, followed by a green candle. I don't see 3 or more red candles followed by a green candle on the Qs. Oh, January 4th. Okay, back here. 3 red candles followed by a green candle. Okay, fine. This ETF is an at-the-money put-selling ETF. Oh, it's an okay, so now I have my explanation of what the ETF is. It's an at-the-money put-selling ETF. So it will give you a signal that the dip that you have identified is no longer going more than 50% of the daily expected move, and as a result is showing signs of bottoming. I don't have a concrete way of dip buying in a bull market because I was very new to trading before the market started selling off 2 years ago. I think this might be good for me in combination with other signals that you or others have in the VTF. Okay. Appreciate you sharing that. I have zero experience in actually being involved in any of these income producing option selling ETFs, so I don't really have any real feedback for you, except I would say try it small, measure the results as you see them, and then if those results are good, give us an update so we can learn more and be involved with you. That's how we build strategies. So I always love, Dave, that you're always, as a trader, trying to think outside the box and having different thought processes and different strategies. So again, no real broad feedback on that idea except for you to test it and then give us more feedback after you've tested it. And if it's profitable, we'll all jump in with you. What's going on with Save? Nothing after hours. Got smoked. From Victor. on way down train of thought, should we expect continuation in the T-triple-Q? The T-triple-Q above 56.20 on runners above it. Today's candle, and obviously is going to be affected by the economic news and by earnings reports. Today's candle, I think, is a signal for price and time correction in the market, which is what we've been looking for, just because of the extension. So, we spent a lot of time talking about extension, so I'm not going to get into too much detail. But with where we're at and how we keep getting to this $10 worth of extension, it looks to me like today's candle is a signal that we now need to either go sideways or sideways/lower to enable these moving averages to catch up to price or price to catch up to moving averages. So, can you expect continuation in the Qs? In a very small picture, I would say no. In a slightly bigger picture, I would say yes. Because again, today's signal just basically means, hey, we need some time here. So I think you need a few days, a week, and then again, barring there not being anything new that comes out that's a major development from big tech earnings, which are mainly going to be next week at this point, or from these major economic numbers this week, then I do think that dip becomes viable at a certain point just for continued trend continuation, and then you do get continuation. So again, short time frame off of today's daily candle, I'm expecting more of a pullback or at a minimum sideways action. Slightly bigger time frame, I think that pullback or sideways action is viable, barring that there are no major adjustments from the economic data or major earnings that we're expecting. So hope that helps, Victor. Thanks for the question. Yeah, but how big of a weight is IBM in the Qs? Not nearly as big as Tesla. All right, looks like I got through everything in the VTF, so I'm going to pop over to YouTube. There are a lot of comments in YouTube here. I think they start from the top, so that's where I'll read them from. Kevin G saying those Cybertrucks in the snow are an L. I assume that's a Tesla comment on their trucks. I've seen some videos of that where they don't look like they're doing too good. They look cool, though, sort of. From Robert. Hi, Derrick. I am working on general guidance for different market days and typical market behavior for each day. So far, I have fundamental day, when the market is trading on economic news, technical days, when we can expect technical sideways price action, and individual stock news days when the market is driven by individual stocks. Are there any other type of market days that come to mind? I think that covers it. What are technical catalysts, or technical might even be the wrong word there, but what are catalysts for market price action, basically, that can create different events? Well, you can have a fundamental event that creates what you're calling a fundamental day. You can have a technical event, like a breakout's occurring, which is leading to new buying and short squeezing coming in the market. So that could be, a technical trading session. And then you can have, when you first said individual stock news days, what I thought you were going to say is when, like similar to yesterday, when the market's in a tough spot, these are types of days where you want to focus on individual stocks and not the market as a whole. It sounds like you're actually saying something a little bit different. It sounds like you're saying that there are certain types of days when there are such important individual stock news in important companies like an Apple that it actually moves the entire market. So maybe that's actually two different categories right there. But otherwise, I think you got it covered. I want to create some general guidance on how the market is moving on these days in order to include that potential behavior into my morning game plans. I love it. I love it, Robert. I'm all for the idea. And I would say that's a lot of what we're doing here in the morning meeting every day. It's a lot of the stuff that I'm assessing. I've never necessarily divided it into the categories that you're dividing them into, but the thought process has always been there. It's always been, asking myself, where are we gapping? Why are we gapping? And therefore, what can I expect from this market? And are there any catalysts, fundamental, technical, or related to individual stocks that will actually affect the market? and then that, dictates my expectations of the price action for that day. So thanks, Robert. From Apex Joy, do you think that there's more DWAC downside as a possibility? I sure do. I think it's 0. But like I've said in a lot of meetings, you have to be very careful, because even though this thing is probably literally worthless, they could squeeze it to $150 if they want to. For the moment, from a technical perspective, this is just a price correction down to it's not even to the ADMA on the daily yet. So technically there's more room to the downside. Fundamentally there's more room to the downside. So yeah. So good luck on your trade. From Kevin G. The market bounce right as SPY caught up with averages at 10 a.m. was perfect. Yes. This is exactly the type of action that we're looking for. And when I was describing the IWM in the beginning of the morning meeting, beginning of the afternoon meeting today, where I was talking about, what am I doing in that first 15, 30 minutes when we have these big gap ups? I want to see how the price action satisfies the gap. This is what I'm talking about. This is a combo time price correction. It's not heavy momentum selling, which is usually not a good sign. We're moving sideways, which is letting the moving average catch up. We're also kind of grinding down here a little bit, so we're also coming to those moving averages. And when will you typically get a pivot? Depending on the time of the day, in that 8:21 EMA area. So yeah, this was literally perfect. Touches the ADMA, pierces through it, and then gives us one of my favorite 2 technical continuation patterns, which is the inside and up into that moving average. Price correction, sort of a negative Maribozu, inside bar breaks up, boom, there's your pivot. You could look to go long off that. So yeah, absolutely perfect. Cool. Yes, Apex Joy, that's correct assessment. We're just reading through the comments here. Up to Turbine. Rivian. Is Rivian moving on Tesla? Where is Rivian now? I haven't looked at this thing in a while. Oof. Yeah, Rivian's down small after hours, but they've been rocking this thing. Rivian's back at huge support here. It's $15 area. I was buying this in November. I caught some of this move, I'm remembering, off this support. But I don't know. This is not looking good here. Little bounce into the ADMA, lower high, closing at lows into resistance, into support. With a Tesla soft landing, Rivian SUV truck portfolio seems fine at these low prices. Okay, and Rivian's obviously a super speculative one. I don't think that they're planning on being profitable until like 2028 or something. So just keep that in mind. If there's no crash, it's a plus for beat up Rivian. Okay. Thanks for the commentary. Next here is from Gabriel. Do you think market after pullback will be easier dollar environment where funds flow from sectors based on extensions from equilibrium? For now, the IWM looks like it's not participating, but if bulls step up. Yeah, so the dollar and the TOT is huge for this market right now, and it's especially huge for the IWM. So yeah, you want to see dollar weakness. You want to see the IWM moving higher and interest rates moving lower, and then the IWM should catch. But if you get continued news like we got today, then the IWM will stay relatively weak, and it's relatively weak for a reason. So there's a lot of volatility with the Russell right now, and it seems like it's very much hinging on interest rates. I don't necessarily think that the trade's too crowded, though. But you need the supporting factors to come in. Thanks for the question, Gabriel. Back over to the VTF here. Dimitri saying, call me crazy, but I'm hoping for a gap up tomorrow so I can reload Qs short in the 427s. I would actually have a gap down tomorrow because I've got a lot of Qs on, and some of these growth names are starting to get so beaten up again that I think that they might be able to be a buying opportunity into a decent gap down. They close some of these things really nastily at lows. I was looking at Chewy's close look at that. Look at that sell candle the last 5 minutes in this Chewy. Palantir is another one. Palantir below 17. At 17 level we were looking at a couple of days ago has now failed, also because of this economic number today. Palantir was trading fine this morning. Then the number came in and just caused all of these names to totally fail. And that's why I was almost thinking if we could get a gap down tomorrow, maybe I could take a look. But we'll see. What's my take on DraftKings? Chart overall looks great. Super bullish. It's extended and gave a shooting star on high volume today. So I would not buy this now. You need to have already had it or let it reset up. It needs to satisfy some of the extension that it has on the daily, and this topping tail into 40, similar to what I was saying about the Qs when I was looking at them for Victor, is a signal that this thing needs more time to pull back lower or move sideways to reset up. I also don't really know how this Barstool news is going to affect DKNG. I saw that hit this morning, and I did not do any research on it, so that would be something else to look at. Thanks for the question, Joshua. From DL. AMD as well. Great upward trend off an upgrade. Super strong today with the inside nut, but I just thought it was gapping too higher. Naturally wanted to fight the trend and find a good pullback, but after the second step from 176 to 178, that 180 high looked like a good pivot spot. Things lined up well around 1 p.m. with this buys and the Qs as well. I think we'll get a decent pullback before earnings next week. I don't know. It still closed too strong, honestly. You have no upside tail here. The chart's blasting off with momentum. There's nothing in this chart that says lower, honestly. But there is something in this Q chart that says that it needs to correct a little bit. So maybe that can enable AMD to pull back a little bit further. But this is not one that, based on how this daily candle closed, that I would want to be short for a swing. Unless I basically was short from 180 and it closed. I would need at least to close below. I would need to have it from 180 and have it close at least below 178.50, which you got, and have already taken off 75% of my position. It's the only way that I would be keeping this short right now. I like that the Qs can be on the side of the short in the short term, but AMD, I think that with NVIDIA, like I said earlier, and AMD, that the rate of acceleration that these things are having right now is not something that can be sustained. But could it be sustained to $205? Yeah, it could. So just watch out. PayPal got a big smackdown. Okay, yeah, worth having on the radar. Stefan, who is a big trader from our group for quite some time, but he is focusing on starting his new hedge fund right now, so he hasn't been in the VTF or trading with us. He also writes for Seeking Alpha. I posted the link earlier today in the VTF. I don't have it in front of me right now, or I would post it again. But he just published a article that dives deep into PayPal fundamentals. That if you're trading PayPal or looking at PayPal is definitely worth a read. Stefan's ideas have made me a lot of money. I think his ideas have made me more money than they've made him, because I take his ideas and combine it with good technical trading, and he sticks very much to the fundamentals. But yeah, worth a read if you're looking at PayPal. All right. Looks like I got through everything in the VTF and everything in YouTube. If you're in YouTube, give me that thumbs up. Have a great night, everybody. See you all tomorrow.